You didn't storm out, toss the keys on the counter, or swear you'd never come back. In fact, when the divorce talk started, you told yourself you'd fight for the house, the mortgage you paid, the walls you painted, the place your kids learned to ride their bikes in the driveway. But somewhere between the first mediation session and the moment you scrawled your signature, something shifted. Maybe it was exhaustion. Maybe it was guilt. Maybe it was the promise that everything would stay fair. And before you even noticed, the house, the single biggest piece of your financial life, wasn't yours anymore. Here's the part no one explains while you're buried in paperwork. Most men don't lose their home in a dramatic courtroom clash. They lose it in the small print, in the handshake promises, in deadlines they didn't know existed. They give it away by agreeing to keep the peace, trusting a refinance that never happens, or assuming their name magically disappears from a mortgage once they hand over the keys. And the day the settlement is finalized feels strangely calm, right up until that first overdue tax notice hits your mailbox or your credit score tanks because a payment you thought wasn't your problem just went 60 days late. By then, you're not just fighting for bricks and siding. You're fighting for every future loan, every chance to rebuild, every ounce of financial stability you thought you'd secured by being reasonable. Because giving up the house isn't just losing a roof, it's losing leverage, equity, and a chunk of your future you can't get back. So how does it happen? How do otherwise careful, responsible men sign away the biggest asset they own without realizing the price? In the next few minutes, we're breaking down 7 silent traps that hand over the house long before you see the danger. If any of these sound familiar, you want to listen closely, because the paperwork you signed yesterday could be the regret that follows you for years. You agreed to leave it to keep the peace. There was no explosive argument, no slammed door. You sat at the mediation table feeling drained. Every conversation over the house had turned into a fight you didn't want. So when she suggested she take the home and you move on, it sounded like maturity, like you were choosing calm over conflict. You told yourself, let her have it. I'll figure something else out. It felt like the right move, like taking the high road. But peace came with a cost you didn't see that day. The moment you signed off, the house became her problem, and, unbeknownst to you, it also remained yours. You assumed handing over the keys would sever your ties. You pictured her making mortgage payments, covering property taxes, worrying about the leaky roof and the next furnace repair. But the legal reality is that unless your name was removed from the mortgage and title, you stayed on the hook. That shake-on-it moment? It meant you surrendered any claim to equity, but the banks and the courts kept you on the line for every cent owed. Months later, when a payment was missed or a tax bill went unpaid, the notices started arriving at your door. You called her. She swore she'd handle it. You believed her. But the late fees piled up, the credit rating slipped, and suddenly your name was attached to a home you no longer lived in. You hadn't lost the house in a courtroom war. You'd lost it in that calm. Let's just make this easier moment. And now you were paying for her delays, her financial hiccups, her breakdowns in communication. Even worse, you traded your leverage. Owning that house gave you bargaining power, equity to use for a down payment on another place, collateral for loans, a nest egg you could tap. By passing it off to her, you essentially walked away from every future benefit it offered. What felt like a small concession to end the misery turned into a lifetime of silent obligations, missed payment penalties, damaged credit, and the mental weight of knowing you'd given up your most valuable asset without even knowing the score. If you've ever thought, I'll just let her keep it, hear this. Peace might feel good in the moment, but the echo of that decision can last far longer than any argument. Sometimes the quietest surrender is the one that costs you the most. You assumed she'd handle the bills until you got hit with the notices. When you agreed she could keep the house, you probably pictured her paying the mortgage, the property taxes, the insurance, and the occasional repair. But the divorce settlement rarely forces someone to truly afford a home alone. It simply hands them the deed and expects them to figure the rest out. Few people pause to run the numbers. You might not realize that the mortgage payment you once split in half is now your responsibility if her name remains on the loan. Property taxes can double or triple from year to year. Homeowners insurance premiums spike after a claim or a market shift. And maintenance, replacing a roof, fixing a burst pipe, servicing the HVAC, hits with no warning. Each of those line items feels small in isolation, but over time, they add up to a financial avalanche. Then there's the hidden cost of opportunity. By walking away from the house, you lose any chance to tap its equity for emergency funds, down payments, or business investments. Even if you retain a mortgage, you forfeited the one asset that could have been your financial backstop. That safety net that could have covered car repairs or an unexpected medical bill is gone, along with any chance to leverage it in the future. And when she struggles to keep up, the fallout lands squarely on your credit report. Late mortgage payments go on your record. Unpaid property taxes can trigger liens, sometimes sold to third-party collectors who add hefty fees. A single year of missed upkeep can drop your credit score by dozens of points, making loans, car leases, or even cell phone contracts harder and more expensive to obtain. You didn't lose the house in a courtroom battle. You lost it through financial neglect, yours or hers. And because you never calculated the true cost, you're left scrambling to rebuild credit, cover unexpected bills, and find a new place to live. Meanwhile, the house you walked away from continues to erode your financial stability, one late notice at a time. Peace in a moment turned into silent chaos. You thought she'd manage the costs. You thought you were free. But homes come with ongoing bills. And unless you planned for every one of them, the settlement that felt fair can turn into an endless drain on your future. You never refinanced the mortgage, so you're still on the hook. Refinancing sounds like a technicality, but in divorce, it's the difference between freedom and slow suffocation. When you agreed she'd keep the house, you might have been told she'd refinance to remove your name from the loan. It sounded straightforward. She applies, the bank approves, and voila, you're off the note. But in reality, it rarely works that smoothly. First, lenders don't view a divorce decree as an automatic green light. She still has to qualify on her own income, credit history, and debt-to-income ratio. If her finances aren't strong enough, the application stalls or fails outright. Meanwhile, the old mortgage stays in your name, and every payment you once split now carries your signature alone. You think she's taking care of it, but banks don't care about handshakes or courtroom promises. They care about dollars going out. If a payment is late, your credit rating dips. If she misses payment entirely, you get the collection calls. Then there's timing. Refinancing takes weeks or even months. During that window, if your ex loses her job, gets sick, or faces an unexpected expense, the plan collapses, and you may never realize it's fallen apart. The refinancing promise disappears, and you're left believing you've been released, even as each unpaid bill chips away at your financial standing. Worse, the divorce settlement usually doesn't include a deadline or enforcement mechanism for the refinance. If she doesn't follow through, there's no automatic penalty, only the creeping drain on your credit and peace of mind. By the time you see the late notices, the damage is already done. Higher interest rates, collection agencies knocking at your door, and a credit score that took years to build now spiraling downward. All because you assumed taking her off the mortgage was as simple as signing a piece of paper. In truth, that piece of paper mattered far less than the bank's underwriter. And without proactively handling the refinance, monitoring its progress, setting firm deadlines, attaching consequences to the settlement, you traded your financial freedom for an empty promise. Now, every unpaid mortgage notice isn't just her problem. It's yours, too. You won the house until you realized you couldn't afford a loan. It sounds counterintuitive. Everyone assumes keeping the home is the safest bet. You think you're preserving stability for your kids, maintaining a familiar address, and holding on to an asset you can tap for equity. But without a clear budget, that decision can turn into a financial albatross you never saw coming. First, there's the mortgage. You once split it 2 ways. Now it's entirely your responsibility. Even if you qualify for the payment based on your income, what happens when an unexpected expense hits? A medical bill, a car repair, a sudden job setback. There's no second paycheck to catch the overflow. You start juggling bills, putting off maintenance, dipping into savings, or running up credit cards just to keep the lights on. Then there are the invisible costs. Property taxes climb every year, sometimes by hundreds of dollars. Homeowners insurance can spike after a claim in the neighborhood or when the insurer adjusts rates. A modern roof replacement, new HVAC system, or even routine landscaping can cost thousands overnight. Each of these feels manageable in isolation, but add them up over months and your bank account bleeds dry. Many men don't calculate these variables under the stress of divorce negotiations. You're focused on winning the house, not on whether you can realistically manage its upkeep. The emotional security of a familiar place blinds you to the creeping drain on your budget. You gloss over the fine print in the settlement, trusting yourself to handle whatever comes. But whatever has a way of showing up with a hefty price tag. And when reality hits, you discover your beloved home has become a source of constant anxiety. You cancel vacations, forgo social plans, and lie awake worrying about the next repair. You tell yourself it's worth it for the kids, but are they really better off if you're stretched so thin that you can't provide stability elsewhere? Next, we'll look at a deadline that few even know exists, but missing it can erase any claim you thought you had. You miss the hidden deadlines that make or break the transfer. Divorce settlements often include a window, sometimes as short as 30 days, to file deeds, remove names from titles, or record transfer documents with the county. But in the fog of mediation, few people realize those clocks are ticking. They assume the court's judgment automatically changes ownership. It doesn't. Ownership changes only when the paperwork is properly filed, and that usually requires taking action within a strict time frame. Imagine walking away from the house, thinking you're free. Months later, you discover the title never changed hands. The deed is still in your name. Suddenly, you're legally co-owner of a property you no longer live in, still liable for liens, judgments, or even lawsuits if someone hurts themselves on the property. Worse, if your ex decides to sell or refinance later, your consent and your signature may be required. And if you're unreachable or refuse, it can stall the entire process, trapping you between legal obligations and financial headaches. Even when lawyers handle these filings, human error is common. Missing signatures, incorrect legal descriptions, or simply failing to deliver documents to the right office. And because deeds aren't automatically rechecked after filing, no one tells you when it goes wrong. By the time you discover the mistake, often years later, it's too late to rewind. The statute of limitations on challenging transfers may have expired. You're stuck with a co-ownership you never intended. These deadlines aren't small print. They're gates that open or close your rights. Missing one can mean staying tied to a property, stuck making decisions for a home you've abandoned, or defending yourself against unexpected liens. You didn't lose the house in court. You lost it because you never knew the timeline for making it truly yours, or truly letting it go. You trusted her promises without getting them in writing, and that trust turned into your undoing. During negotiations, you likely heard things like, "I'll refinance this week," or "I'll get the deed transferred next month," and you believed it. You shook hands, you moved on emotionally, and you assumed the rest would follow. But in real estate and in divorce settlements, verbal agreements are ghosts. They sound real, they feel binding, but they don't hold up in court or with a title company. Here's how it plays out. She tells you she's already talked to the lender. She's sure she can qualify on her own. She promises to sign off the mortgage and transfer the title by Friday. You nod. You let down your guard. Maybe you even sign other documents under the assumption that the house issue is settled. 2 weeks go by. You ask for an update. She says the lender is slow. A month later, she mentions a hiccup with her credit score. By the third month, she's almost there. But every excuse buys her time, and every delay chips away at your leverage. Meanwhile, you've moved on, found a new place, settled into a new routine, never realizing that if she never finalizes those papers, you remain on the mortgage and title indefinitely. If a payment is missed, you're the one the bank calls. If property taxes go unpaid, you get the lien. And if she decides to sell or remortgage years later, you could be blindsided by a request for your signature on closing documents. Or even worse, discover you cannot object because you already signed a consent form under false pretenses. When you rely on verbal promises, you give up your strongest protection, a clear, enforceable paper trail. Courts won't enforce, he said, she said. Title companies won't transfer ownership because of a promise, and lenders won't remove your obligation without formal documentation. In the end, that trust you placed in her words becomes the gap through which your financial security leaks away, one unkept promise at a time. You traded the house for other assets without understanding what you were giving up. In the frenzy of divorce, someone might have suggested a swap. You keep the retirement account, I'll take the house, or you get the car, I'll handle the mortgage. On paper, it sounds clean, a 1-for-1 trade that leaves both sides with something tangible. But in reality, those equal assets rarely hold equal long-term value or risk. Think about it this way. The retirement account you kept grows quietly year after year, compounding returns you can't see day to day. The house, on the other hand, can't grow on its own. Instead, it drags you under with maintenance costs, insurance, taxes, and unpredictable repairs. Yet many men, eager to wrap things up, agree to hand over their equity, sometimes all of it, in exchange for something that looks safer in the moment, without calculating the hidden drain that property carries. Or consider other swaps. You waive spousal support for the promise of a bigger chunk of the marital investments. You figure, better to have cash now than payments forever. But if those investments are tied up or need time to mature, you may not access that cash when you need it most, while missed support payments could have been enforced through the court. That misalignment of timing turns what seemed like solid wins into regrets. Worst of all, these trades often ignore the emotional factors that influence financial decisions. You might have sentimental ties to the house, memories of family dinners, or first steps in the living room that cloud your judgment. You sign away your stake, thinking it's for peace, for the kids, for simplicity. But peace fades and the kids grow up. Meanwhile, your financial foundation erodes under the weight of that equal trade. Years later, you'll look back and realize you gave up the one asset that could have been your safety net, either because it appreciated in ways you didn't foresee or because it offered borrowing power you sorely needed. Those sentimental or short-term gains look pale compared to the slow-burn cost of losing your home's value and flexibility. So before you agree to any asset swap, dig deeper. Compare long-term growth rates, liquidity, tax consequences, and risk exposure. What feels fair today might feel like a hand you never want to play tomorrow. Because in divorce, the quiet trades often come back to scream the loudest regrets. Divorce settlements aren't just about numbers on a spreadsheet. They're about the foundations of your future. The house you thought you secured can slip through your fingers in silent moves. A quick peacekeeping agreement, a missed refinance, or a handshake promise that fades when the paperwork doesn't. Every small compromise you made in the name of calm can echo into years of hidden bills, damaged credit, and lost equity that you'll never get back. By now, you've seen how giving up the home often feels easier in the moment, and how that ease can turn into financial strain. Whether you walked away for peace, assumed she'd carry the costs, or traded the house for other assets, each decision carried risks you might not have understood. The real cost of losing your home isn't just physical shelter. It's leverage, security, and the quiet confidence that comes from owning your future, brick by brick. But it's not only about loss. It's about awareness. If you're still in the throes of divorce, take a breath before you sign. Ask hard questions. Who stays on the mortgage? Where are the true upkeep costs? Have deadlines been set and enforceable for every transfer? Get every agreement in writing, and don't rely on trust when legal obligations are at stake. Because once the ink dries, regrets become permanent. And if your divorce is already behind you, this isn't a reproach, it's a roadmap. Review your settlement. Check who's on the loan. Confirm the refinance went through. Look up property tax records. You may have the right to revisit certain steps or negotiate late transfers, depending on your jurisdiction. It's never too late to reclaim stability. Your home is more than four walls and a roof. It's equity, leverage, and the backdrop of the life you're building. Protect it with the same vigilance you used to build it. Because peace in a moment is fleeting, but the consequences of handing over your house can haunt you for years. Take control now, before those quiet traps become permanent regrets.